Welcome to today's market report. European shares rose on Wednesday as a report that a Brexit trade deal could be stuck later in the day cheered investors amid concerns over the passage of a much-awaited US pandemic aid bill. The pan-European STOXX 600 index traded 0.4% higher after political editor Robert Peston at Britain's ITV said a Brexit trade deal between the UK and the EU is possible on Wednesday after progress in talks on fishing rights. However, London's FTSE 100 lagged as the pound gained on the news and weighed on shares of internationally focused firms on the index. Daimler was the top boost to the STOXX 600, up 2.7%, after the newspaper reported the German luxury car maker is preparing a stock market listing of its trucks division. Meanwhile, US President Donald Trump threatened to not sign an $892 billion coronavirus relief bill, saying it should be amended to increase the amount in the stimulus checks for individuals. US government operations are being funded on a temporary basis through 28th of December, waiting for the $1.4 trillion in federal spending for fiscal 2021 that is also part of the bill. Failure to either pass another stopgap bill or override a possible Trump veto of the legislation could result in a partial government shutdown. The threat by the outgoing Republican president, who has less than a month left in office, throws into turmoil a bipartisan effort in Congress to provide help for people whose lives have been upended by the pandemic. The bill they are now planning to send back to my desk is much different than anticipated, Trump said in a video posted on Twitter. It really is a disgrace. The US House of Representatives and the Senate both passed the legislation overwhelmingly on Monday night. Trump said he wants Congress to increase the amount in the stimulus checks to $2,000 for individuals or $4,000 for couples, instead of the ridiculously low $600 for individuals that is in the bill. Oil was down on Wednesday with a build in US crude oil supplies and the travel curbs to slow a new mutant strain of the COVID-19 virus, putting pressure on already weak fuel demand. Brent futures were down 1.06% to $49.30 per barrel. WTI crude futures fell 1.68% to $46.23 per barrel. Gold was down 0.08%, trading at $1,868.75 per ounce. On the FX front, the GBP-USD pair refreshed daily tops around the 134.15 region in the last, albeit quickly retreated few pips thereafter. The pair was last seen trading near the 134.40 region, up around 0.5% for the day. The pair booked on the overnight late rebound from the vicinity of the 133 mark and gained some strong follow-through traction through the first half of the trading action on Wednesday. Despite the lack of progress in Brexit negotiations, investors remain hopeful about the possibility of a last-minute EU-UK deal. This was seen as one of the key factors lending some support to the British pound. The Bank of England must keep a close eye on the inflation expectations, as the Kingdom could find it difficult to manage its debt burden after the coronavirus pandemic. Chief Economist Andy Haldane, in an interview with Bloomberg, released. The market focus will remain glued to the incoming Brexit-related headlines and developments surrounding the coronavirus saga. Apart from this, traders might take cues from the US economic releases, durable goods orders and initial weekly jobless claims. The data might influence the US dollar price dynamics and produce some trading opportunities around GBP-USD pair. Euro-dollar consolidates in Asian bounces ahead of the European Open as the US dollar holds the lower ground amid mixed market sentiment. The sentiment remains cautiously optimistic, with market eagerly awaiting a Brexit trade deal breakthrough, while on the other hand, US President obstructed a $900 billion COVID stimulus. A fresh risk aversion gripped Asia on Wednesday after Trump's speech, although it failed to lift the dollar's haven demand amid positive regional equities. The main currency pair awaits fresh impetus for the next push higher, as a fresh batch of critical economic releases will be released from the US docket later today. Also, fresh virus updates will be eyed for fresh cues on the market sentiment. Currency pairs are quite volatile in themed markets conditions ahead of the Christmas holidays, and profit-taking is also playing a role in this week's markets action. The dollar index is trading at 90.323, slipped 0.26%. This is today's market news. Thanks for listening. We'll see you next time.